Everybody, it's Kyle Daniels with Vista Sotheby's International Realty, bringing you the weekly update for Wednesday, March 17th. Happy St. Patrick's Day. It's a big day for our family, coming from a lot of Irish heritage. My wife's grandmother actually grew up in Ireland, and one of my favorite trips was a trip we took, oh gosh, now it's been 12 years ago, to go spend St. Patrick's Day in Ireland. It was a crazy time. If you haven't been, once this pandemic travel craziness is over, go check it out. Well, back to real estate for this week. I've got some encouraging news, and we've seen almost a 10% increase in new listings. Now, what does that mean in numbers? We saw roughly about 10 more new listings come out this past week than the week before, but that's a good sign. We're also seeing some interesting things in terms of multiple offers, and not that we're out of the multiple offer market. It's just that we're seeing fewer of them. So for instance, a couple of properties recently in North Redondo, before we were seeing 10, 12 offers, we're down to 4 and 5 offers, which means that I think maybe we're starting to see a little more saturation with that demand. Now, we're a long way away from being out of a seller's market where buyers are in a multiple offer situation. I don't expect that to change this year, but we are seeing a little more sanity to the market. More inventory will mean buyers have a few more options. Again, I'm not expecting any price drops, but we are seeing, again, more opportunities for buyers out there. But I want you to think about something here. There's been a lot of talk of, are we going to see another financial crisis? Are we going to see foreclosures? Are we going to see a repeat of the last market crash? And I would say no. And this quote really caught my eye this morning, and it comes from the group over at First American, one of the economists there. The household debt to income ratio is at a 4-decade low, and household equity near a 3-decade high. In other words, because people have seen a huge increase in the equity, but also, as far as debt to income, people have had to borrow a lot more rationally in this market than we did see the last go around. And that was stated income loans. I mean, you just needed a fog, a mirror, and you can buy a property. Well, now you've had to come in with 20%, and in this bidding war environment, I don't know anyone that's been able to get a property for really less than 20-25% down, because you need to show that you're a good buyer, and a lot of sellers don't want to deal with the risk, especially when you have all cash offers in the mix. So, mortgage debt being one of the highest debt in family, family balance sheets, we'll call it. This debt to income ratio being at a 4-decade low is really telling that the people that have bought this last market run have come in with a lot of equity. They're not going to just walk away from it. And in fact, I did a survey at Palos Verdes. There's something only like 24 homes that had a notice of default filed against them in the last year. 24 homes. Let's compare that to affidavits of death that have been filed on the title records, and that's over 400. So there's more likely people that are going to be dying and then moving out of their home, I guess not intentionally, but moving out, compared to people being forced out because of foreclosure. So think about that. I don't see a foreclosure crisis coming. And again, if you're a seller, it's still a great market. If you're a buyer, it's not a bad market. You just have to be ready. We've talked about that a bunch. I don't want to beat you to death with that, but that's it. Have a happy St. Patrick's Day. May the luck of the Irish be with you. And as always, reach out if you have any questions. Thanks for watching. Have a great rest of the week.